Welcome back to Ferocious Education. This is Ed. Today we're talking about Clover Health, CLOV. Now I've been meaning to talk about this one for a while. Last time I did talk about it was back in September 7th, 2021, somewhere back where it was trading above $10. Currently, it's trading at $3.58. So we're going to discuss a little bit onto what happened and some of their basic prices or financials that might give us an indication to what's going on. Now, if you've never heard about Clover Health is basically a company that tries to operate as a next-generation Medicare Advantage insurer, which leverages Clover's flagship software platform, the Clover Assistant, to provide American seniors with highly affordable, obvious healthcare plans by empowering physicians with data-driven, personalized insights at the point of care through Clover Assistant platform. Clover strives to improve clinical decisions making and outcomes. So for this company itself, they have various amount of news that came out since the last video. December 17th is the last one, which they had an offering, follow-on offering AMA. So they basically do talk about some of the things that they've done. So hey, hello everyone, we appreciate your patience from hearing from us during the quiet period to connect on our follow-on offering. Now, we are more excited than ever in our long-term vision for Clover, with the goal of generating long-term values for shareholders and incredibly positive an impact within healthcare. That was back on December 17th. Now, back on December 17th, it was around $4.40, so around $1 higher, and it did drop since then. So some of the things they mentioned, that they've raised $300 million in gross proceeds through offerings, 40 funds invested into our transaction, and they do talk a little bit about how COVID-19 still has a larger impact than we currently expect, and that's why we had to raise some more money, all that stuff. But they have currently approximately close to $600 million in cash. Now, honestly, for this company here, we do have as well some other news. So of course, they had the $300 million back in November 17th for their public offering. Now, that one came out actually at a hit of a stock because it came out to be around $5.75 per share. And that made it take a beating as well, as you get to see, from $7.78 and then drop significantly to around that price point, $5.84. So right off the bat, they slashed $2 out of the price point, and people didn't like that from a news pack. Now, back on November 12th, they mentioned that they expected an average number of direct contract lives in 2022 to double from current levels. Now, they promised a lot of things since then, and a lot of different people promised better numbers, but they've yet to actually deliver on those. So some of their financial results from the third quarter mentioned that the revenue was $427.2 million, which is up 153% from year over year. They also had basically customers increase 125%, and going downwards down to here, their total revenues might have actually improved, you get to see. But here is the end point, their net revenues. Their net revenue was $12.8 million in quarter 3 2020. Currently, it's a loss of $34.5 million. So they went around $40 million in loss, around 42 to be exact. And that is massive for year over year. Even though they improved their total revenues, they really killed their net loss. Adjusted EBITDA is even worse and went from negative 20 million to a negative 100 million. Normalized adjusted EBITDA is double what it was, almost around there, from negative or a loss from 36.8 to a loss of $61.1 million. Now, a lot of the blame is coming in towards COVID and stuff, but for a company to increase the revenue at the expense of the net loss, that could be a bit more of management rather than just kind of just going for, hey, COVID kind of beat us. I mean, they are providing healthcare solutions while hospitals are overwhelmed in some cases or some places in the US. This should be their prime time, in my own opinion. Now, they do have a presentation where they're going to go over basically some of their, hey, look at us, we're going to be in growth and this 100% and all that different numbers since launch. But honestly, the only thing I could care about for this company is their financials at this point. Now, they do talk a little bit about here, and COVID-19 is mentioned already, of course, the impact from COVID-19 pandemic for MMA membership growth, and due to the launch of direct contracting in April 9, 2021, they seen some increase, but as well later on you can see in the financials that they mentioned COVID-19 as a reason to raise more offering as well. So I'm not really enjoying how they're using that in a sense. Now, in terms of 2019 to 2020 to 2021, you're able to see they're back to 2019 with the net losses being around $400 million. Not a good look for the entire year. Their adjusted EBITDA is currently one of the worst, even worse than 2019, where it was $175.4 million in loss, 2020, $74.4, and currently at $317. So, taking a look into the price over books, it's around 4. Price over sales is 1.76. But the price over sales is based on last year's, because it's TTM. That's how the metric works. So you can expect it to be a lot worse. So it's probably going to be around 3 to 4 times as much, so it'd be around 4 to 5. So it's still overvalued than the SP 500 if you take that into consideration. And that's why it's a 359. Now, profitability. Their adjusted EBITDA, or actually this is just EBITDA, and net profit and operating margin are all very close to negative 40%. The return on assets is negative 45%. Return on equity, negative 67, and return on investment capital, negative 52. So I know I'm being critical onto this one, but let's take a look into their biggest backers. First off, Green Oaks Capital Partners. They reduced their change percentage into around 56%. They halved their entire shares. They went from 50 million shares to 25.7 million. And in terms of Vanguard, this was a little bit ago, but they went from around 26 million shares to around short of 10 million, 9.5 million shares, a decrease of around 64%. So their biggest backers really kind of left it off. Institutions are a bit quiet onto this one. Not a lot of things happening in December, but just kind of the norm. In terms of insiders, so you have Chamath, for instance, buying at 570 back on 24th of November. And that might have helped the stock just a little, but ever since, it doesn't really look like any of them really sold a lot or, for instance, bought a large amount. I mean, Chamath, the last time he bought before the 5.75, have to go all the way back. I don't even have a record of this. It wasn't in 2021. So I honestly feel like it was more of a decreasing off an average, maybe to sell later on, or it's just to try to give his backers a little bit of comforting levels. Now, before moving on towards technical analysis, if you would like to see more content like this, make sure to click the subscribe and leave notifications button on. Don't forget to drop a like, and let's move on towards technical analysis. Now for Clover Health. For technical analysis, there is a few key things that we want to take a look at, like willing percent R is highly oversold. A highly oversold one, which is by the way very similar to the relative strength index, showcases that in momentum, you're going to get more buyers in. Although it almost dipped around 8% today, a negative at 3.58, one of the lowest levels it's ever been for the stock. And remember, the SPAC was sold at around $10 for investors and insiders. So it's definitely a massive punch, around losing 66% of its entire value. Now, in terms of momentum, it's currently in the negative side. In terms of MACD, you're seeing that it's currently attempting a negative reversal, and it's not really looking as good as we want it to. Currently, it's showing us a strong negative trend at an ADX of 46.24. The question is, well, how much more are we going to see of this? Well, the stochastic fast and stochastic slow are kind of pinpointing a bit downward, suggesting a new break for low, which we see today, but it's bound to at some point stop and take a bit of a bullish kicker. Now, the moving average bands are actually going downwards, as you get to see here. So the current top of it is 447, the bottom is 3.55, or around 3.65. It already broke the moving average bands and currently breaking the Bollinger Bands. So what's most likely going to happen is a scenario very similar to what you've seen here. I don't think it's done bleeding. I think it might actually stabilize at 3 or 250, which is not a good thing, and I hope that that is not the case. But volumes are low. And with volumes are being low, and this was a higher volume thing, and basically there's more of an outflow for the stock rather than buying, this stock is really sinking into oblivion. And without good news, with major net losses, the 10K thing is coming out soon. That's the end of the year earning. And from what we've seen so far, it's about to be the worst record for net losses. And that's not good for a company that promised to be a lot better as a part of their SPAC and sold that narrative to investors. That's a very dangerous thing. Now, there's no honestly point to do Fibonacci retracements all the way from 28.85 to 370 because the first resistances would be around 965, 1334, but let's do some price line actions. So first off, your resistances are 389, 427, around 479, higher to 528, 581, and then 646, and then upwards to around 712, 758, and then higher to 816, 873, and then to 917. Although the support is right where it is, 357. Now, there is a bit of an issue for this one. The stock is currently taking a beating. It had a bit of a pulse in the aftermarket, but it did see that a few times over. So it is going to be a little bit of an issue as we move forward for this one. This stock is definitely bleeding. You're not able to see the promises being delivered, and a lot of people are counting on basically their 10K to be a bit better, which is not. It's not going to be better. So far, this company is going to continue bleeding for at least until the first quarter 2022. So you got 3 more months of probably trading sideways or bleeding, unless it goes into pump and dump schemes, which is never good, but it might be able to let you sell if you bought around $10. Now, for this stock, why am I saying the first quarter 2022 is a key mark is because it will showcase what they're doing in order to get a better balance sheet on 2022. And basic rule of thumb is that they need 2022 to be better than 2020 for a significant reason, because that was a key point for them going to SPAC. Remember, they went to SPAC early on in 2021 by taking a look and saying, hey, look at 2020. We did a lot better than 2019. We'll be better than 2021, which they didn't. But at least 2022, if it's better than 2020, that will surprise the market and get the stock to raise up on the price that they were selling at least $10. But what do you think is going to happen here? Make sure to mention down in the comments below. Share, subscribe, and like, and have a wonderful day. Now, if you're still here on this video, make sure to drop down below and join our Discord. We have a lot of different things going on, including, for instance, members that gives picks for free. It's not pump and dumps, we just things we think about, swings, etc. We also have really exciting bots. You can actually use those ones. For instance, we're just testing out this bot, for instance, that gives you Fibonacci resistance points, activities, etc. And we have a bunch of free things, totally free. We run on tips here, and you can ask me questions, suggest stocks, etc. It's a really nice community that has been growing up very fast at a very good rate, and it's totally free. If you would like to join that one, feel free to do so in the description below, and have a wonderful day.